The Silicon Valley bank collapse. Is this the latest step along the road to the financial reset? Hi, my name is Astin-Gregory. In today's video, I'll be exploring what's been happening over the last few days and relate it to the wider topic of the financial reset. Now, the Silicon Valley Bank, I'm sure most of you will have heard now, went down on Friday following the largest ever bank run in US history. And it's the largest bank failure since the 2008 financial crisis. Now, for further context, the Silicon Valley Bank was also the second largest bank to fail in US history and the most influential financial institution to crash since the 2008 crisis. So this is quite a big deal. Now, the wheels started to come off on Wednesday last week when the bank announced it had sold a bunch of securities at a loss and that it would sell $2.25 billion in new shares in an attempt to shore up its balance sheet. But it was too late. Panic had set in, and by Friday, over $42 billion had been withdrawn from the bank as panicked consumers sought to pull their funds out of the bank before US regulators shut it down and put the bank under the control of the receivers to seize the remaining assets. Now, the impact of the collapse was felt across the world as fear began to rise. So did concerns of a wider banking crisis. But have those fears really dissipated? Is this just the beginning of something much bigger? Markets have been quick to play down risks of a wider liquidity crisis. However, once fear is in the system, anything can happen. Now, with the initial talks of possible bailouts on Friday, it all started to feel a little bit like deja vu back to that crisis of 2007, 2008, where we had all of the stories of the banking crisis and bailouts and more. However, in an announcement on Sunday, the US Treasury, the Federal Reserve, and the Federal Deposit Insurance Corporation, the FDIC, all stated that depositors would be made whole, meaning they can access their funds without the expenditure of the taxpayer. The FDIC is supposed to guarantee money at insured banks of up to $250,000 per depositor, a bit like the guarantee scheme here in the UK, although it's capped here at $85,000. And in this case, however, in the US, it fully protected all of the depositors' money with no limit. Now, the Silicon Valley Bank is no ordinary bank. It is the bank of the tech giants in Silicon Valley. It largely funds entrepreneurs. So whilst it does have retail customers, it's largely a commercial bank working with businesses. So it's a different case, and you can imagine many of these banking customers had far more than the $250,000 on account. Now, in terms of the UK arm of the bank today, it was also announced that HSBC UK had agreed to acquire Silicon Valley Bank UK for a measly £1 in a rescue deal at, again, no cost to the taxpayer and with depositors fully protected under a similar arrangement. Now, a lot of folks in the financial world are insisting that these are not bailouts and that it comes at no cost to taxpayers. Well, in both cases, it's stated that no losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Well, I beg to differ. It's true that it's not strictly a taxpayer bailout, as we know from 2008 and the form that took. So in the strictest terms, it's not a bailout. But because the Treasury this time is not providing the backstop, this is still somewhat misleading. The bailout, or whatever you want to call it, is instead being funded by a special assessment on solvent banks, which in turn are owned and funded by people who also pay taxes. Banks themselves, of course, are supposed to pay taxes. Now, remember as well that banks also pass on the costs of regulatory compliance to its customers. So in a number of ways, the taxpayer is still paying. The idea that the government bailout fund comes from some sort of magical pool of no consequence is just not correct. It's always the public that ultimately takes the hit. So there's a lot of shenanigans around whether this is a bailout or not, lots of clever wordage, really to try and detract from what's really happening, because what the government is ultimately trying to do is stabilize the market to make sure there isn't a rush on other banks, as we saw back in 2008. So not calling it a bailout is a little subtle way that you can do that. Now, I do jest a little bit. There are quite a few technicalities to this, but you have to look at it in this way. There is clearly some massaging of what's going on. But the problem doesn't stop there, you see, because moral hazard is one of the major worries when it comes to bailouts or not bailouts like these. And banks and consumers have less incentive to behave appropriately. What do I mean by this? Well, the reality is the moral hazard comes into effect when things like bailouts occur, because the incentive to behave appropriately and be cautious with your money is kind of removed when you can plausibly assume that the government will simply step in and save the banks and the consumers from any mistakes, so that there is always a risk of these types of bailouts, whether you call them a bailout or not. So a bailout, I'm going to continue to call it a bailout. The technical people can say, that's misinformation. I'll probably get a little banner under my thing. Well, we're going to clearly get a banner under the thing regardless, because in some ways I'm still tackling the narrative here. But the bailout like this, in whatever form you want to describe it, uses public money to compensate for risky or bad financial decisions, and therefore incentivizes more risky or bad decisions in the future. And we end up going round and round and round in circles with no consequence. We saw in 2008 how the fat cats basically walked away with huge bonuses as their send-off for decimating the economy. It's just all too familiar how these big industries seem to profit from crises. We've just spent 3 years watching the pharmaceutical industry literally bleed governments dry, profiting exceptionally from the pandemic. This, I'm sure, will be no different. I may be slightly skeptical now, but this isn't my first rodeo. I was working in banking, I was working in financial services at the time of the previous recession, and I saw firsthand the implications of what went on back then. No, I wasn't anywhere near the steering wheel or any of the gears, but I could see the machine in action, and I'll talk more about that in a moment. So whilst the failure of the Silicon Valley Bank is certainly part of the scandal, the mismanagement, the misprioritization of assets, and its overall risk strategy. However, you could also say that this current political response is part of the scandal too, because of this situation, once again, not only reveals the moral hazard, but it shows just how captured that governments are. This time not by Wall Street banks, but this time indeed by tech companies and the oligarchs that are currently the primary source of the current administration's funding. Big tech and their wealthy owners are far too cozy with the government, and as such have been able to get away with the kind of risks that Michael Burry has been warning about for some time. Now, Michael Burry, who rose to fame after correctly predicting the 2008 crash and subsequently was popularized in the film The Big Short, has blasted Silicon Valley Bank's bosses for their recklessness and compared the fiasco to the dot-com and housing crashes in his now deleted tweet, which read 2000, 2008, 2023. It's always the same. People full of hubris and greed, taking stupid risks and fail. He also goes to call into question whether a wider financial reset or crisis will emerge from this. But the big question is clearly, could this scenario play out with other banks? What's going to emerge over the next few days? One thing we've learned from previous financial crises is that no bank is an island, and the big banks tend to mimic each other's behaviors, pushing the boundaries in similar fashions. Have other banks also used their long-term bonds in this case and no interest accounts to store money that they couldn't lend to clients as easily as before? What's going on underneath the bonnet of all the other banks, not just in the US, but around the world? What happens this week when investors begin to start questioning their banks' investing practices? Will they discover banks across America and indeed the world have a shortfall? What are the wider implications of a potential crash or a potential collapse? It's almost certain following this event that we'll likely see further volatility in the financial markets as uncertainty begins to grow and inflation continues to spiral out of control. Now, to fight inflation, the US federal government, the bank has aggressively raised interest rates at a pace unseen since the 1980s. Now, these interest rate hikes have also contributed to the collapse of Silicon Valley Bank in at least two key ways. Firstly, higher borrowing costs have rocked the economy. And secondly, the value of the treasury bonds have also been undermined by the rate hikes. And of course, the exposure to the tech sector is also a risk factor here. Now, Sheila Bair, who's a top banking regulator who was primarily active during the 2008 financial crisis, says that the stunning implosion of the Silicon Valley Bank is exactly why the Federal Reserve needs to halt its war on inflation. Everything's a war these days, to assess the full impact of its actions so far by raising the rates, because so far this is now starting to create new damages, and it's contributed clearly to this event. So a further rise could have unprecedented consequences. Now, Christopher Whalen, who's the chair of Whalen Global Advisors in New York, said that, and I quote, "I think the Fed badly miscalculated the impact of rising interest rates. And so these self-inflicted wounds, and if we see more banks fail, then the Fed is faced with a very tough situation, which may force them to drop interest rates and go on a full U-turn." He went on to say that there could be a bloodbath this week as banks are in trouble. The short sellers are out there and they're going to attack every single bank, especially the smaller ones. Again, this is institutionals rallying after the banks and trying to profit from the situation. Jake Dollarhide, interesting name, chief executive of the CEO of Longbow Asset Management in Oklahoma, added that there are obvious cracks in the system, and the worry is that if the Fed raises rates again in 2 weeks' time, it could break something in the banking system, which is why banks are selling off and the financial markets are nervous. Now, taking a wider view of this, prior to the recent collapse of the Silicon Valley Bank, Ray Dalio, who's the world's largest hedge fund founder, he'd previously warned multiple times of the forthcoming crisis. And he's not only warning of a financial crisis, but he's saying that it's going to be much bigger than what happened in 2008. But this time around, if we zoom out even further, we're not just talking about bank failures. We're not just talking about a stock market collapse. We're also facing now something much bigger, something with the potential to alter the very financial fabric of society altogether. Because the big question mark is this: what is this reset leading to? What will this crisis lead to? We know, having looked over the last couple of years, that the old adage of problem, reaction, solution. And we've got a set of solutions waiting in the wings known as central bank digital currencies. So we're on the cusp of a global financial reset that could possibly see the demise of fiat currency as we know it, the introduction of central bank digital currencies, or CBDCs as they're referred, and the birth of further Orwellian surveillance systems that monitors and control every penny that we earn, save, and spend. Now, ultimately, as many of you are aware, the very building blocks of such a system are already in place. And the question is, will the collapse of the Silicon Valley Bank now accelerate the rise of central bank digital currencies and other manifestations of the reset? Now, whether this is a direct consequence or an indirect consequence is unclear, but mark my words, just watch now over the weeks and months ahead how the acceleration of central bank digital currencies will occur. It's already happening. More and more countries are trialing them. There's more and more countries signing up to the scheme. Now, again, we could look at this in a balanced way and say, that digital transactions are going to be a way of the future. Well, yes, they may well be. But the whole risk of programmable central bank digital currencies goes against the tide of the decentralized finance movement that is growing with Web3 and blockchain. And it really risks an undue power, an unprecedented power on behalf of the governments if this continues to unfold without proper consultation and deliberation with the public to ensure that these currencies do not come with programmable assets that could result in what ultimately will be a social credit system. Now, all of these factors are cooking up within this storm. And if further banks collapse, undoubtedly alongside the recession, the cost of living crisis, this will usher in at greater pace this financial reset and everything that comes with it. Now, the timeline of such things is unknown, but what is certain is that this reset will continue to usher in the largest wealth transfer in history. In fact, most people, the general public, aren't aware, but the transfer of wealth started during the pandemic and is now accelerating. The bottom line is that we are at a critical juncture, and what's coming next could change everything. However, now is not the time to succumb to the inevitable fear in the market that will continue to grow. People lose out financially in times of profound change because they panic and fail to take appropriate action. I witnessed the consequences of this firsthand during the 2007 and 8 banking crisis whilst I was still working for HSBC Bank. In fact, what I saw then was what ultimately led me to leaving my career in banking behind, and I've never looked back. As I mentioned, I never got near any of the levers that created that crisis, but I saw enough to know that the devastating consequences of that crisis could have been avoided. And it set me on a whole new path to where I am today, of a much more skeptical and questioning mind, not just of government authority, but centralized institutions and major big industry and the impact and power that they have. Now, that said, it is important to recognize that within the coming financial reset, wealth will not be destroyed. We're not living in a time now where wealth is decreasing. It is simply changing hands. It is a wealth transfer. Now, by understanding what is coming, not only can you protect your assets and safeguard your finances, but you can also discover opportunities to hedge the financial reset so you can grow your wealth too. How can I say this with such confidence? Well, going back once again to 2007 to 2008, I witnessed this firsthand. Those that had their eyes open, those that had their ears to the ground, those that were willing to adapt, those that were willing to take risks, those that were willing to change trajectory, those who were willing to course correct, were the ones that found the opportunity. Now, of course, those with the greatest assets and the wealth not only had the most to gain, but they also had the most to lose. But for the everyday person, there were many, many opportunities during that recession. And it takes having the right mindset, knowledge, and tools in order to navigate that particular moment in time. And I believe that we are approaching another one of those moments in time, and people are already beginning to cower in fear. Now, whilst it's true that we cannot change the waves in the ocean, we can certainly learn how to surf them. We may be in uncharted waters, the future is unknown, but we want to invite you to join us in pioneering a more positive path forward amidst all of the turmoil and uncertainty, so that you can have a greater chance of being on the right side of the reset. Ultimately, the tools that are available to the world's elite, the oligarchs, some may be off limits, but the knowledge, the decisions, the options are still out there. It's just about learning how to get through the propaganda, the misinformation, and all the noise to find the things that can help move you forward. Now, all of this is exactly why we've recently launched the Navigating the Financial Reset group program. It's designed to help you understand what's coming and to explore a wide range of options so you can make empowering decisions about your financial future. So we'd love to invite you to be part of the journey with us as we begin to navigate the financial reset together. This group program is going to provide support on an ongoing basis every step of the way. We'll be having 2 dedicated support calls every single month, with one call explicitly focused on the latest analysis and trends in the crypto and digital asset markets, and the second looking at strategies for hedging the financial reset so you can protect your assets, safeguard your funds, and discover options for expanding your wealth and protecting your future. Now, as part of the program, you'll also be able to participate in our private discussion forums to share insights and to get your questions answered. We're going to be bringing in a whole host of different analysts and experts to share their views on what's happening in the wider economic markets. So you can get firsthand access to those who are living this day in and day out. Now, the reality is we are on an uncharted course here, which is why we've launched a new podcast called Uncharted Territory, because the reality is conventional wisdom, conventional knowledge may or may not serve us well during this time, because whilst there are similarities to the previous financial crisis, there are many, many differences. So we have to be on our guard, we have to be forward thinking, and we have to look at the patterns as they're beginning to emerge in order to navigate this, which is why we're calling it navigating the financial reset. There's lots of people out there saying invest in this, invest in that, in a very binary sense. Well, there may be some truth in those investment recommendations, but we have to be looking at the big picture here as it unfolds. This is truly a different time and place. We're looking at a wholesale reset of the way we approach the markets, the economy. The reality is the fiat currencies could collapse. We could see a change in the kind of world order, with the US dollar losing its place as the reserve currency as a potential reality. All of these things are potentially in the pipeline. So we can't rest on our laurels and look simply to the past for guidance. Whilst if we zoom out far enough, we can see how cycles will play out during these times. There are many, many nuances of this time, which is why we invite you to explore with us as we unfurl everything as it's unfolding. Now, the program is hosted by myself and Sam X, who's the creator of our Navigating Digital Assets course, which is so well rated, and the co-host of our brand new Uncharted Territory podcast, which will be broadcasting every single Tuesday. Sam is an experienced investor in digital assets who gives talks on the financial reset, offers private consultations and trainings to help empower people who are interested in understanding and investing in digital assets. Between us, we have the wealth of knowledge and contacts. However, we are really setting the program up in order for our members to explore the changing world together. If you'd like to be part of what I've shared with you tonight, then you can head over to weareelevate.org/reset and check out what we've got on offer. It's our prerogative to help you understand the changing field as it emerges, because the reality is we are in this together. We are in this changing time together, and there is things that we can learn from what's gone before us, but we need to be ahead of the curve. We need to be joining the dots as they unfold. And as you know, from the last few years of being on this show, we've had to look at an enormous amount of patterns in order to piece together the very true nature of what's been happening with regards to the pandemic. And now we need to do the same with the financial markets and the economy as we approach the financial reset. Now, you can go over to weareelevate.org/reset to find out more. You can also find out more about the Navigating Digital Assets course there, which provides a foundational knowledge about the kind of changing world of finance, including crypto. People are trying to get their head around blockchain, Web3, and all these different technologies, because there's lots of misinformation out there and scams around crypto. You can get a really solid grounding whether you intend to invest in crypto or not by taking the course. And lastly, I'll say look out for our extended episode tomorrow night at 8 p.m., where we will share the background on how we came together to look at these issues and what we believe is necessary to navigate the financial reset as it continues to emerge as part of our weekly podcasts. And finally, I invite you to join us on Wednesday inside the Elevate community for our private supporter event, where we'll be hosting author and historian Simon Elmer for a live discussion and Q&A session on the biosecurity state in the UK and how the public health crisis of the last couple of years has caused this rise in the biosecurity state and emerged as part of this new normal that people have acclimatized, much in the way that people acclimatized to all the measures that followed 9/11. We're now seeing similar surveillance and biosecurity practices emerging as part of this new normal. We're going to be exploring how this happened and what we can do about it. So if you're interested in joining us, Simon's been giving some amazing talks over the last 12 months. He's just released two new books on this subject. He'll be with us live on Wednesday inside the Elevate community. Our supporters will have access to the event, but you can also get tickets at weareelevate.org/reset. Simon Elmer. That's weareelevate.org/Simon Elmer. So lots happening this week. We'll be releasing our podcast with Sam tomorrow on the financial reset. We're live with Simon Elmer on Wednesday night, and the recordings from that event will be published on Thursday evening. So we're taking a deeper look at these issues as they emerge. As always, we're planning ahead and looking to see how we can mitigate the challenges that are forthcoming. But ultimately, we're beginning to really turn our attention to what we can do proactively to solve many of these issues as they come up. And on that note, I'll close by saying we plan to change the nature of these Monday conversations to something more solution-orientated. We've been using these sessions on a Monday to kind of keep you informed of the latest developments, and we'll continue to do that in different ways. But on Mondays, we really want to provide an uplifting session, an empowering session on how you can take action to avoid some of the things that we're seeing in the financial reset, but more importantly, looking at solutions to the deeper issues that we've uncovered over the last couple of years. My name's Astin-Gregory. This is the Elevate podcast. Thank you so much for watching. Please share this episode, and I'll see you again on the Uncharted Territory podcast tomorrow evening at 8 p.m.